Chapter 29. Bookkeeping. When opportunities come knocking, if you have the cash, you can open the door. Bookkeeping and proper accounting is a must for any business that wants to succeed. Imagine having a business and keeping everything that relates to the business in your mind without having files and record books in place. Keeping good records can be cumbersome and seem frustrating when you don't know what to keep or how to organize it. However, not keeping good records can cost you lots of money and waste lots of time when you require information about specific transactions done in the past. This is where bookkeeping and proper documentation comes in as a valuable, non-negotiable necessity. The definition. Bookkeeping is the recording of your company's income and expenditure, assets, and liabilities into a set of account books known as ledgers. The basis of a good bookkeeping practice is the double entry system. Double entry simply means to enter each piece of data and transaction twice into your ledger. For example, if you received a payment of any amount for a sale, you would debit the cash or bank account and credit the sales account. I don't want this to be a boring academic account chapter, but you still need to understand the basics. 1. For every debit entry, there must be a corresponding credit entry. 2. Every book you keep for accounting and record purposes are all referred to as ledgers. 3. You have different books to keep that constitutes a ledger: income and expenditure book, assets and liability book, inventory book, sales and purchase book, etc. Ledgers are mostly divided into 3 groups: sales ledger, purchase ledger, general ledger, which has 5 divisions, namely assets, liabilities, income, expense, and equity or capital. Note this table as a guide. I expect you to have someone that will handle your bookkeeping and accounting either as a staff in your company or as a consultant through outsourcing. However, you still need to have a general idea of things yourself to interpret reports, statements, and detect fraud. When your books and accounting information are in proper order, it helps you and your business greatly. Users of accounting information. 1. You, the owner. This helps you to know the profitability and financial resources of the business. 2. The bank. This will help them know if you are viable to repay a loan if you need one from them. Remember the 5 C's of credits? 3. The government. They need this to calculate the various tax payable and see if the company has been a good corporate citizen. 4. Investors. Whether for a publicly quoted company or a privately held firm, a potential investor will want to know the profitability, stability, and health of a company before they decide to buy into such company. Financial reporting. 1. The balance sheet. This reports, as of a certain point in time, the resources of a company, assets, the company's obligation, liabilities, and the equity of the owners. 2. The income statement. This reports for a specified interval of time the net assets generated through business operations, revenues, the net asset consumed, the expenses, and the net income. In summary, the income statement tells you whether your company is making profit or loss. The balance sheet tells you how efficiently a company is utilizing its assets and managing its liabilities in pursuit of profit. The cash flow statement tells you how cash has been increased or decreased through operations, the acquisition or sale of assets, and financing activities. Practicalizing bookkeeping. The best way to get bookkeeping sorted is to use a spreadsheet like Excel or an accounting software. Apart from storing your information on the computer, you must maintain a detailed and separate filing for sales or income, expenses, fixed assets, bank accounts, etc. Maintain daily records. This is one of the most basic rules because if you don't keep accurate records, you don't have an accurate way to track the financial condition of your business. You must attach supporting documents to every transaction before you file them, e.g., sales or income, invoice, receipt, details of customer. Open a separate bank account for your businesses and ensure that you reconcile it with your books on a regular basis. I hope it is simple enough for you to grasp. One of the first staff you need to have should be someone to help with your accounts and bookkeeping because it is vital. Tips on choosing a bank. Every wise and serious-minded businessman must open a separate account for their business, and the kind of account you open, the bank where you open the account, all matter a lot. Let these tips guide you. 1. What banks do your colleagues in the same business and sector usually use? Let this guide you, because they may have special products that benefit your business. 2. Is the bank healthy? Check their audited account and financial reports for the last few years to guide you. Beware of banks without verifiable audited accounts. 3. Is the bank close to your location? You don't want to have to travel to do bank runs. 4. Do they have a wide network of branches to help your customers transact business with you? 5. How long does it take to execute transactions in the bank? 6. Is the management or board of the bank stable and dependable? 7. What is the general staff attitude in the bank? Are they courteous, or do they treat you like a pest or demand tips to do their job? 8. Do they have any existing product tailor-made to take care of your kind of business? 9. Is their tariff structure fair? Are their charges excessive and exploitative? Your bank should be the one that is supporting you and not exploiting you. 10. Do they match with your brand and image? Some banks just don't help your brand or image,